Okay, folks, so we've got a lot to talk about. I want to give you an update on some of our big plays. I want to add some new plays that I see as having a very high potential for doubling, and I want to talk about what the Fed just said. Let's start with the Fed. So the Fed basically said that they are expecting benchmark interest rates to remain near zero for the next 2 years. I watched his press conference today, and my take was that he was saying, folks, you're overreacting. Yes, we should see some spikes in inflation, but this recovery isn't over yet. There's very little risk of the economy overheating at this point. Could happen in the future, but at this point, they don't see the need to raise interest rates until 2023. They asked him about bond yields and whether he'd do Operation Twist, which would be basically intervening in the market to lower the bond yields. He said, hey, we're going to keep all tools on the table, but at this point, we don't need that. He seemed to take a cautiously optimistic tone on the economy. He stressed that never before in history have we had an environment where we're coming from a huge pandemic, and we've put unprecedented amounts of stimulus into the economy and printed unprecedented amounts of money. And that the idea that we're going to have a smooth recovery is definitely not a sure thing. There's a lot of uncertainty. Net, though, he hasn't really said anything new today. He just reiterated and calmed the markets, and that's why we saw this bounce. In my opinion, what the stock market wants to see is it wants to see stable interest rates. It wants to see a steady and growing economy, but it doesn't want to see everything come at once. It doesn't want to see such a huge boom that everything ricochets and you get these massively increasing interest rates. And today the Fed painted that picture. Okay, now that that's out of the way, before we get into our plays, the only thing I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe. And quick plug, if you'd like to learn how to trade, would like access to our 8+ hours of self-paced video lessons led by your favorite kooky trader, would like access to our daily morning briefings, and would like access to our price targets where I give my own targets for where I see our plays headed, I'll go ahead and put the link to this below. That being said, what you get out of ZipTrader U is what you put into it. The more you work with it, the more you'll learn, and the more confident you will be. So make sure that if you're going to join us, put in the work, folks. Okay, first some updates. Our crypto miner plays Mara, Lovely Mara, and Riot, Righty Riot. Mara up 12% today, Riot up 13% today. Very, very nice. I'm really itching for a new breakout in these guys as Bitcoin comes back, but thou shalt be patient. Thou must be patient because Bitcoin is teasing, we know Mara's teasing, and Riot is joining the tease race. Okay, next update, PLTR. This one's certainly not picking up yet. I was watching the CEO of Palantir on CNBC yesterday, and he was complaining about the emphasis Wall Street is putting on near-term goals and near-term profits. Let me play you a quick clip.
We're building the company we believe in. We're going to do it for the long haul. There'll be ups and downs. My lawyers won't let me say more than that. But if you want something else, it's a huge world. Buy some other stock. You don't have to buy Palantir. No one's forcing you. We're completely liquid. Do something else.
Now, this isn't the first time we heard this. We heard Kathy Wood talk about this from ARK. She said the big problem with Wall Street is they're just too focused on what they're doing quarter over quarter instead of what they can do year over year or decade over decade. Wall Street wants immediate shareholder value. It doesn't care about long-term shareholder value. It's worth mentioning, though, the irony is that actually this market condition has really favored companies that have a lot of long-term growth down the road. I mean, if you look at 2020 and 2021, even with the correction or the rotation, a lot of big companies, including PLTR, are factoring in a lot of growth ahead even at their current prices. I think the CEO of Palantir is just kind of upset that people are constantly asking him about his damn share price.
Buy some other stock. You don't have to buy Palantir. No one's forcing you.
Literally telling people, if you don't like the stock, don't buy it. I got other things to worry about, like actually building a good damn company. I think that PLTR is quite the interesting beast. On one hand, they are definitely a growth stock, but on the other hand, they have a lot of clients and numbers to boot that justify a very good valuation. Yet anytime they do something good, it tends to get brushed over. Even this interview was characterized pretty poorly. Palantir stock dips after CEO tells short-term investors to consider other stocks. CEO's brash comments push shares lower. I mean, if you watch the entire interview, that wasn't the crux of the interview. And of course, that's what they focus on. Obviously, partially for clicks, but also they're kind of getting you to think the way that they think. If you think about it, they could have said, oh, Palantir focused on long-term growth instead of short-term profits. That could have been the headline. I'm sure there's some headline somewhere with that, but that's not the results that come up first. And the results that come up first is what creates the leaving impression for a lot of new traders and people that are just dabbling in the market or thinking about buying PLTR or selling PLTR. So anyway, something to think about. This one, in my opinion, is a very high conviction play of mine. I think that you're going to like what this does, but of course, this is one of those plays. You got to be patient with it. Okay, Voozy, quite the doozy, folks. Presented on this augmented reality play last week, I believe. I think it was last week. We did a whole video breakdown of why I like this play, commercial usages of their products, and different clients that they work with and whatnot. And it's shown to be pretty damn resilient, up a decent amount today. Shout out to folks who are enjoying this play. Okay, now let's get into the good stuff. So there were 3 stocks today that just rallied a shite ton. TCAT up 277%, IMTE up 79%, OCG up 76%, and all 3 of these stocks have one thing in common. And what is that, folks? Take a guess. Well, these are all in the sector or have exposure in the sector of NFTs, non-fungible tokens. You've probably been hearing a lot about the sector in the headlines, on Elon Musk's Twitter, all over the internet. People selling these little digital art pieces for millions of dollars. Even ARK likes these NFTs and thinks they're the future. But as this trend continues, and we're going to explain more about it in a second, I want you to start thinking about what plays in the stock market would be best to benefit from the NFT craze. For me, some of the ones that I'm excited about are actually some of the ones that ran up a ton today. My plan for TCAT is I'm looking for TCAT to pull back massively within the next week or so. I'm looking for a 50% drop or more. Did I just pull that out of my rear? No, folks, we've seen every single time in the past that it's run up massively, it's had a massive cool off. I see this taking a massive drop, either tomorrow, within the next week, however long. And once it's taken that drop, we want to buy it again. This is one of the players that's going to benefit from the NFT trend. The other one I want to talk about is OCG. Start thinking about, next time this drops, probably in the next week or so, if not tomorrow, let's get a good damn deal on it. I'm also going to be looking at YVR very strongly at the next dip. This is another NFT exposure play. Keep these on your watch list and consider taking some strategic plays in the next time they sell off. At least in my opinion, these are very, very interesting plays. My take is buy a drastic dip and then take profits on the way up and then rinse and repeat. Okay, that being said, what the hell is the deal with NFTs? Why would you buy a piece of digital art? Just take a damn picture of it. Well, the way that NFTs work is that you buy a one-of-a-kind original digital creation like a crypto kitty or any type of artistic media, videos, domain names, pictures of tweets, whatever have you. And then blockchain technology provides a certificate of authenticity, creating artificial scarcity, making it so that digital products aren't actually able to be replicated. I mean, you can take a picture of them, you can record them, whatever, but the original can't be replicated because it uses blockchain technology to ensure that it has one certificate. The whole value is a self-fulfilling prophecy where some people see value in these digital pieces of art, so more people buy it, thinking that more people in the future are going to see value, and then because they're buying it, the prices go up, and then more and more people are like, oh, well, in the past it's gone up, and then more people buy it. I think that what you're going to see in these is a very clear trend of these getting more and more popular over the upcoming years. That being said, I have no idea how to value the little digital pieces of art. I think you can't really value them at this point. But instead of choosing between buying crypto kitties or crypto dogs or crypto punks or whatever, you could instead bet on the entire NFT sector with some e-commerce plays that are actually exposed or are selling and going to benefit from this whole NFT craze. If you want to hear an expert's take on NFTs, this isn't the channel. I'm not an expert in NFTs. However, there's an undeniable trend here. It's actually funny. If you go on Google Trends, look up 2 search terms, stocks and NFTs. Well, NFTs have been steadily trending up while stocks have been trending down. If you look at them over the last year, the NFTs really just started their rally of interest back in early February. And since these are essentially totally speculation-based assets, the more people are searching them, the more these will go up, and the more these go up, the more people will be searching them until you get that bubble popping, and then they sell off again, and then once again in the future you start getting that speculation again. I think that these are asset classes that are in the early stages of the hype cycle. That means I want to exploit some of the stocks that are going to benefit from that. Do some due diligence on TCAT, OCG, and YVR, and then wait for them to take a big damn dip. At that point, I think it's worth the risk to take some strategic positions in them. But these are going to be very volatile. These aren't for the weak at heart. If you have, a heart condition, we care about you. We don't want you buying these. If you don't and you see sort of the trend here that I'm talking about, get it at a dip and then ride the next wave. Also, I haven't done anything stupid in a while, so I want to do something stupid. I want to buy a straight up NFT, and I'm going to let you guys choose. I'm deciding between a crypto kitty or a crypto punk, maybe even a cybercon. Which of these asset classes, it's funny to call these asset classes, but which of these asset classes do you think is going to perform the best? Comment down below and let me know, and I will buy whichever one gets voted on the most. If you have something that I haven't thought about, comment that below as well and I'll check it out. Okay, I want to talk about the requested ticker of the day, Plug. This morning we talked about how they disclosed accounting errors that could adversely affect several years of reported financial statements. Pretty sad to see screw ups like this. It does create the perception that they're hiding something, and Cohen analysts as well as some other analysts are thinking that this is a very, very good dip buying event. Personally though, I'm waiting for the dust to settle a little bit more. I think that this was a genuine mistake, but still, it says a lot about how the company's being run. They're saying that they need to restate entire financial statements for their entire fiscal years of 2018 and 2019, quarterly filings for 2019 and 2020. money. So at best, they're very, very sloppy, so I'm not super excited about this. Though they did say that there is no expected impact to their current cash position, business operations, or economics of commercial arrangements, still think that this is going to be something that dogs them down for a little while. It's a bad PR nightmare, even if nothing actually changed in the company. I'm personally waiting to get a little bit more information on this, but do some digging on this one and make your own choice. I'm just covering this because you guys asked me to. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. Let me know in the comment section below if you have a ticker you'd like me to cover. If you'd like to learn how to trade, would like access to our private chat, daily morning briefings, as well as our price targets on all of our plays, well, go ahead and click the link in the description below. Coupon code YouTube15 will get you 15% off at checkout. And if you'd like to sign up with Webull, get some free stocks, and be able to trade in the pre-market and the after hours and make Charlie smile, then go ahead and sign up with Webull in the link below as well. Deposit $100 to get those stocks. And as always, have a great day, and I'll see you in the next video.